check करना. Yeah, I'll discuss the answer to homework question. Each and every question I'll discuss. Okay, Gaurav, you answer. If I receive gift of money 40,000 from Mr. X and 40,000 from Mr. Y, so will it be taxable or not? 40,000 cash from X. What? So it will be fully taxable. Okay. What if it is like this? From Mr. X, I got money of 40,000 exempt because both are below 50,000. Okay. Okay. You answer last bench. Last. If I purchase a land, okay, you can answer in Hindi. That's okay. If I purchase a land at rupees 10 lakhs, stamp duty value is 12 lakhs. So how will you decide? Yes. Explain with this only. First, what I will do? Correct. Actual is 10 lakhs. So 2 lakhs is the benefit. Correct. Now, yeah, this you have to compare with 50,000 or 1 lakh. And then between 1 lakh and 50,000, whichever is, so this is higher. Yes, because the benefit is greater than 1 lakh. And greater than means it will be taxable. Okay. Okay, you give answer. List of exempt incomes. All exempt incomes. All section 10s. Yeah. 1017 is what? Daily allowance received by MPMLA. Daily allowance received by MPMLA. Then 1070 word. What was the keyword? DW Ramu Fakir G. So in that list of items which usually fall under income from other source, this point was not there. But then what did I teach you? If you find any new income which is not covered in the keyword of DW Ramu Fakir G, so you have to understand it is taxable. Because if it is something exempt, I would have taught you. So this is some new thing which you found, but you should not be surprised. This way, one or two unusual income you will find in the question, but it will be taxable. By the way, what is this fees for attending board meetings? See, in companies, you know, when directors attend the board meeting, they are given fees for attending the board meeting. Even that is income from other source taxable. Then agriculture income in Pakistan. Because it is in Pakistan, it will be taxable. It is exempt only if it is in India. So even this will go in outer column. Okay. Income from units of UTI, even this is taxable directly outer column. Then dividend from foreign company taxable directly outer column. Then see, as a member of parliament, he received salary of 8,000 and daily allowance of 20,000. See, this you make it in a, you have to present like this. See, I'll show you, wait. You can present like this. Income of MP MLA. Okay, then you can write it in two parts. Salary will be written fully in the outer column as taxable and daily allowance will be exempt. Okay, or you can write like this: receipts as MP. Receipts as MP means as MP you received something. Okay, and then you have to make two arrows like this. One will be salary, other will be daily allowance. Okay. So you can write like this: receipts as a member of parliament, then salary will be 8,000 into 12, 96,000 outer column, and daily allowance will be dash in bracket exempt under section 1017. This way you have to write, okay? Outer column dash. Then amount received on maturity of life insurance policy. This is fully exempt under section 1010D. So outer column dash in bracket exempt under section 1010D. Okay. Then income of his minor children. Now see, minor children income, it is exempt up to 1,500 per child. So see here there are two children. One has got income of 7,000. So this will be exempt up to 1,500. So balance 5,500 will go to the outer column. And second son's income is only 500. And up to 1,500 is exempt. And what do you mean by up to 1,500? Anything below that will be exempt. So this is below 1,500 only. So it's fully exempt. You can directly put dash in the outer column. Or if you want to show it in the inner column, then write in the inner column 500, then exempt 500. Directly outer column you can put dash also, okay. And see, when we say exempt up to 1,500, up to means what? Anything below 1,500 will be tax free, okay. So see, the presentation should be like this. Income of first minor son, inner column 7,000. See, your answer should look like this. Income of first minor son, inner column 7,000, less exempt under section 1032, 1,500, outer column 5,500. Then income of second minor son, directly outer column dash, in bracket exempt under section 1032 up to 1,500. In bracket you can show it's up to 1,500. What did I say? Exempt under section 1030. Wait, I forgot to start the recording. Don't mind, I will rediscuss this sum. Because students who are absent, they depend upon the recording. Good, I realized early. Okay, let's discuss the answer to the homework question. Question number 1, what was given? Mr. Saxena furnishes following details. Okay, in that, see, first point was winnings from horse race, fully taxable. This you will write directly in the outer column, 25,000. Then rent from letting out a building along with plant and machinery, furniture. And whenever you find building plus other assets combined, it becomes a composite rent. So it will be fully taxable. So 9,000 is per month. So multiply by 12, 1,08,000 directly in the outer column. If there would have been some expenses, I would have deducted also, deduction under section 57. But there were no expenses, so directly in the outer column, 1,08,000. Okay. Then dividend from PQR Limited. Any dividend is fully taxable. Outer column 20,000. Then award from Lions Club. This is Lions Club. This is not government. If you get award from government, it will be exempt. But this is non-government entity, so it will be fully taxable. So even this will go to the outer column. Then fees for attending board meetings. This thing was not covered in the keyword of D.W. Ramu Fakir Ji. But then what did I say? Anything you find new in the question which was not discussed by me, you can take it as taxable. So this will be taxable directly in the outer column. Then agriculture income in Pakistan. Because it is in Pakistan, it will be taxable. Outer column full amount. If it is in India, then it is exempt. If problem would have been silent about India, Pakistan, we can assume it is India. But here they have clearly said it is from Pakistan, so it will be taxable. Then income from units of UTI, even this is taxable. Dividend from foreign company, even this is taxable. All taxable amount you have to write directly in the outer column. Then as a member of parliament, he received salary of 8,000 and daily allowance of 20,000. You know how to present this thing? You can write like this. Receipts as a member of parliament. And then below you have to draw two arrows like this. First you have to write salary and then whatever is the amount in the outer column, and then you will write daily allowance, but that will be dash because it is exempt under section 1017. And in our question, salary is how much? 8,000 per month. So multiply by 12, 96,000. That will go to outer column, and daily allowance will be dash, exempt under section 1017. Then next point was in amount received on maturity of life insurance policy. This is fully exempt under section 1010D. Okay. See, in sums there is nothing new. You have to just remember the theory properly. If you know the theory properly in tax, sums are very simple in tax. So this is exempt under section 1010D. This will be dash in the outer column. Okay. And then last point was income of his minor children. First son 7,000. Second son 500. It is better you make presentation of each child separately because that 1,500 is per child. So we will show the presentation per child. So see, you should be showing like this. First you will write income of first minor son. In the inner column, 7,000. Less exempt under section 1032, 1,500. Outer column 5,500. Okay. And then second son's income is only 500. And what loss is up to 1,500 is exempt. Up to means anything below 1,500 will be tax free. So this is below, so this will be exempt. So you can present like this: income of second minor son, outer column dash. In bracket you can write exempt up to 1,500 under section 1032. So this was a normal sum, and what is the total of the statement then? 3,82,500. This is the final answer of this question. Taxable income from other sources. Okay, then question number 2 we have already done. Next is question number 3. Okay. Now see, question number 3, first point was what? As a member of parliament, he received salary and then daily allowance. So how to present this? You will write receipts as a member of parliament. Then one arrow you will write salary, and that is 10,000 into 12, outer column 1,20,000. And daily allowance will be dash, in bracket exempt under section 1017. Then rent from building. What do you mean by letting out? Letting means to give on rent. Okay. But what have we given on rent? Building plus plant and machinery, furniture. So it becomes a composite rent. But along with that, they have given repairs, maintenance, depreciation, expenditure. And whenever there is expenditure, deduction under section 57. So first in the inner column, 20,000 into 12, that comes to 2,40,000. And then after that, what you return? Less deduction under section 57. And then one by one you have to write all the expense. So here first was repairs 25,000 less, then maintenance and depreciation 40,000 less, and balance in the outer column 1,75,000. That will come to the outer column 1,75,000. Okay. Then agriculture income in India, because it is in India it will be exempt. But then what to do with expense? Ignore. See, what did I explain last lecture? Taxable income, deduct the expense. Exempt income, ignore the expense. Winnings also ignore the expense. Dividend and mutual fund income, deduct only one expense. Family pension, standard deduction. These five points you should remember thoroughly. These are 5 points of section 57. So these expenses you will ignore, and agriculture income you will write in the particulars column, but in the amount column dash, and in bracket exempt under section 10.1. Okay. Then see, next 3 points what I am doing, you can also do like this: interest, circle interest. Because see, whenever interest income comes, our line of thinking is same. What is our line of thinking? We have to search this in GPS. If it falls in GPS, it will be exempt. And if it doesn't fall in GPS, it will be taxable. So check one by one. Interest on bonds of Z-Tech Limited. Is it from GPS? No, so it will be taxable. Then interest on debentures. Is it from GPS? No, it will be taxable. Taxable means you have to write the amount in the outer column. Then interest on PPF. Yes, this is from GPS. Exempt under section 1011. And because it is exempt, outer column dash. I hope you have done all this properly. Okay. Then family pension after the death of his wife. Okay. So family pension, is this army employees family pension or normal? Normal. So here you have to remember that standard deduction. Because see, as soon as you see family pension, you have to take standard deduction. But the presentation will be, first you will write family pension in the inner column. Okay. See, this sum is actually solved in my iPad, so I can show here. Family pension. So first you will write 60,000 in the inner column. Okay, this is the same sum. Okay, and then less deduction under section 57. Have you written this deduction under section 57? Check the presentation also. Huh? Then 1/3 of 60,000, that comes to 20. And another amount is fixed 15,000. Out of the two, whichever is lower. And the one which is lower, you have to put it in box. because you have to explain the paper checker, the one which is lower. You have to show what amount you have selected, because here there are two amounts, 20,000, 15,000. Which one you have selected? So you have to put it in box the amount which you have selected. And what does this arrow represent? Whichever is lower. So this is the way you should have presented. So 15,000 you deduct, and outer column 45,000. See, my style is what, most of the sums as I ask you to try first. Then I discuss in detail in the class. Okay. Otherwise, see, if I directly solve the question in the class, you will never learn. It is always advisable that first you solve on your own, and the discussion will be done at length in the class. But first you have to solve on your own, so that you come to know how much you know and how much you don't know. Then what was the last point in the question? Dividend from, sorry, not last, next point. Dividend from foreign company. Now dividend income is taxable, but what about collection charges? See, yes, ignore, very good, because in case of dividend and mutual fund income, you can deduct only one expense, that is interest on loan to invest in shares. Do you have interest on loan here? No. So all other expenses you have to ignore it. So this 9,500 will go directly in the outer column. Okay. Then royalty income is taxable, and the connected expense you will minus. And whenever you minus expense, your language should be deduction under section 57. Be careful about that. I have seen students what they write, less exempt. See, when you are deducting expense, you cannot write the word exempt. Exempt word is for what? If there is some income, and if government say, okay, don't pay tax, then exempt. But whenever it is an expenditure, you have to use the word deduction. Okay. So deduction under section 57, 5,000 you will minus, outer column 28,000. Then amount received from life insurance policy, this is fully exempt, 10-10D, outer column dash. Winnings from lottery, taxable, but what about expenditure? Yes, in winnings you ignore the expense, because winnings doesn't come from hard work, it comes from luck. Okay. And see, whenever you ignore any expense, it's better you write a note that expenditure related to winnings and collection charges related to dividend will not be allowed as deduction, or they are ignored. Because see, if something you ignored, it's better you write. Either you write in the statement only, or if you want after the statement is over, below you can write it as a note. Note for what? The items which you ignored it. And in this question you ignored collection charges related to dividend. Okay. So you can write collection charges related to dividend income is ignored. It is, what should be the language? See, it is not allowed as deduction. See, if you remember first lecture I told you, in income tax what should be a language? If it is income we write taxable or exempt, and for expense we write allowed or not allowed. So see, it is an expense, so see my language, it is not allowed as deduction. And even for winnings you can write expenditure of purchase lottery tickets is not allowed as deduction. Then so this was question number 3. Then read question 4. Wait, sorry. Good, you reminded me. What is the total of question number 3? 4 lakhs 52,500. $450 to 500. This is the final answer. Okay. Then question number 4. Mr. Nasir, the financial controller of Glaxo Limited, blah blah blah, whatever it is. Then see first point. Nasir is a member of Bandra Club. During the year, his winnings from card games amounted to 3,000. So any winnings taxable, whether it is from card games, horse race, lottery, taxable. Sometimes kaun bane karodpati, any winnings taxable. Then directors meeting fees. This is directors get the meeting fees for attending the board meetings. So even this is taxable. Okay. Then Bank interest, see, whenever you come across interest, you have to check in GPS. See, do one thing, what I've done, you can also do like this. You should do like this, because see, right now the chapter is fresh. But after 2-3 months, when you see, you will realize, oh, why did I circle interest? Because for all interest income, the rule is standard. If it is in GPS, exempt. If it is not in GPS, it is taxable. So bank interest doesn't fall in GPS, so it will be taxable, outer column. This one is post office savings bank account. Yes, this is from GPS, but it is exempt up to 3,500. So this you will have to first write it in the inner column. Interest on POSBA 7,500, less exempt under section 1015. You know that gold bonds, POSBA, PPF Sukanya, gold bonds, POSBA, PPF Sukanya. So for gold bonds and POSBA it is 1015. So 1015 and you will minus 3,500, outer column 4,000. Then this is cooperative society deposit interest. This is not in GPS, so taxable. Directly outer column 600. So what was the total of this?
8,900.
80.
8,900. 8,000. 8,900.
Okay, 8,009. Okay. Then next question, Mr. Govinda is a member of parliament. Okay, fine. First point directly. As a member of parliament, he received salary. So how will you write first? Receipts as a member of parliament. Then one arrow, you will write salary. And how much it is? 3,000 per month. So multiply by 12, 36,000. Directly in the outer column, fully taxable. Then daily allowance, you will put dash. In bracket, exempt under section 1017. 1017. Then he received dividend of 500 from cooperative society and 5,000 from ABC Limited. Both are taxable. See, you can pass two different entries for this. One, you can write dividend from cooperative society 500. Then dividend from ABC Limited 5,000. Both will go directly in the outer column as both are taxable. Okay, then he has won 9,000 in crossword puzzle. So winnings from crossword is fully taxable. Outer column 9,000. Then he has let. Let means what? To give it on rent. Now what has he given on rent? He has let machinery and furniture and also building. See, whenever building plus other assets are combined, it becomes a composite rent. And it is given on rent to Mr. Wagle at a monthly rent of 6,000. Did you notice it is monthly rent? So it is monthly means you have to multiply by 12. Be careful, huh? So into 12 that comes to 72,000. After that expenditure on repairs was given and depreciation was given. And for expenditure you have to write deduction under section 57. First you will write repairs 4,500. Then depreciation 18,000. This you will minus. Okay. So in the outer column how much you get?
49,500.
49,500. Composite rent outer column 49,500. Check the answers properly. You should have a proper correct notebook with you with right answers. So what is the final answer? 1 lakh exactly. Okay. Yes, tell me. Not getting 1 lakh. Check, some calculation mistake might be there. Give me the right answer. These videos are watched by so many people. They should not get the wrong answer. Is 1 lakh correct?
Yes.
Okay, so 1 lakh is the final answer for question number 5. Okay. Then question number 6. Directly see first point. Do one thing. Just the way I am doing, you can also do. Interest, interest, interest. And whenever interest income, you have to search in GPS. See one by one. First is interest on company deposit. This is not in GPS, so fully taxable. Outer column 1,000 family pension, normal family pension. So you will have to take standard deduction. So first in the inner column you will write 2,500 into 12. That is how much? 30,000. This will come in the inner column. And then less deduction under section 57. In that you have to show two amounts. 1 upon 3 into 30,000, that is 10,000, and the second amount is 15,000. Out of the two, whichever is lower. So what is lower? 10,000. So that 10,000 you will minus in the inner column only. So 30,000 minus 10,000, outer column 20,000. Getting everyone properly? Then interest on debentures. This interest is not in GPS, so it will be fully taxable. Outer column 2,000. Then income from units of mutual fund. Mutual fund income is also taxable. Directly outer column 1,000. See, for only thing, once you remember the exempt items, then the chapter is very simple. Because anything other than exempt will be taxable. So you have to just remember this list of exempt incomes. Okay, then purchase of a shop for 65 lakhs. Stamp duty value 70 lakhs. You know, this is a point of gift. Whenever you purchase something at a lower price, it becomes a gift. And how did I realize it is a purchase at low price? Because 70 lakhs is what? Stamp duty value, which is as good as the fair market value. And imagine a shop has a market value of 70 lakhs. I have paid only 65 lakhs. So I purchased a shop at a low price. So whenever purchase of immovable property at low price, you have to use that formula. 10% of actual price or 50,000, whichever is higher. If up to that much the difference is there, then it is exempt. So see, it is better I will put it in our system. Our system is like this. Look here. What is the amount? First you have to see the stamp duty value. What was the stamp duty value? 70 lakhs. Okay. And what is the actual price? 65 lakhs. So first you have to see the difference. This maza means what? The benefit. And the benefit is, okay. So in the outer column you will put dash. And in the particulars column you have to show this working. See, last time also when we had solved one sum, we had shown this kind of working. So in the particulars column you will write HDV 75 lakhs, sorry, it was 70 lakhs. And then actual price 65 lakhs. First what will you write? The main heading, purchase of a shop at low price. Remember last lecture I told you, if you get something for free, you write gift of blah blah blah. If you buy something at low price, write purchase at low price. So here you should write purchase of shop at low price. And then in the particulars column only this working you have to show. Yes?
We will have to write that exempt under section 56.
See, a student has a doubt, do we have to write that section 56 to 10? It is better you write. But in case you don't write, it is not that risky that your marks will be cut only. Okay? Yes, wherever section 10s are there, it is a very basic thing expected from a student. Anything covered in 10, okay, that you should not fail to miss. But it's better if you have remembered on in exam day 56 to 10, it's better you write. Because the whole chart of gift, it is as per 56 to 10. See, 56 to 10 doesn't say it's exempt taxable. Whether something becomes exempt or taxable, it is as per 56 to 10. Up to 50,000 exempt, above 50,000 taxable, both are written in section 56 to 10. So whenever it is about gift, you can write a general section 56 to 10. So this was outer column dash. Okay. Then that's it. So this was dash in outer column. So what is the total of this? 25,250. Taxable income from other sources. Okay. Then question 7. Question 7, directly see the first point. Income from units of UTI taxable. Outer column 2000. Okay. Then interest on debentures taxable 9,500 outer column. Then interest on deposit. Wait. I forgot to do this. Our protocol is circle interest. Whenever you come across interest, because the interest can have thousands of variety. But our theory doesn't have much variety. It is standard. GPS exam, rest all are taxable. But in question, they can give anything out of the creativity. So first interest, this is not in GPS, so it will be taxable. The another interest is on deposit with bank. Even this is not in GPS, so it will be taxable. Even this Hindustan Liver is not in GPS, it will be taxable. All are directly in the outer column. Then 10,000 from LIC on maturity policy, exam under section 1010D, directly in the outer column dash. Then interest on deposit certificate under gold monetization scheme. This is nothing but gold bonds. And interest on gold bonds exam under section 1015. So outer column you will put dash. But in bracket you have to mention exam under section 1015. Okay. Then gift of 30,000 each from X and Y. Means X also gave me 30,000, Y also gave me 30,000. And see what is the rule of aggregation? All money aggregate. All movable property, no price aggregate. And all movable property, low price aggregate. Three aggregation you have to keep separate. Money, movable property, no price, movable property, low price. Yes, in immovable property we don't do aggregation, it is per property. Okay. So here it is pure money. And all monies you have to aggregate and see. So if you aggregate 30,000 plus 30,000, it is each. So 130,000 I got from X, other from Y. So 30 plus 30 is 60,000, which is above 50,000, fully taxable. Fully taxable. So you can write gift of money from X and Y, bracket 30,000 plus 30,000, outer column 60,000. So what is the total of this? 76,700. Then question number 8. See, in this question, if you notice, they have given the expenses below. Did you notice this? So read one by one. First is dividend on shares of Unilever Incorporation, a foreign company. Then connected with dividend, there is a point below. Did you see this? Interest on loan to invest in shares of Unilever. Did you feel it's connected?
Yes.
Unilever. The point which is given above is your dividend income. And below they are given the expenditure. How do I know it is an expenditure? See, loan was taken to invest. And when you take a loan to invest, you take a loan means you have borrowed. So obviously you have to pay interest. So this is my expenditure. Anyways, they have written also, she claimed following expenses. Okay. But then what is the rule? Interest you can deduct, but there is a limit. Maximum 20% of dividend income. So our dividend income is 10,000. So what is 20% or 2,000? 2,000 you can minus at the most. Now you have to see the actual amount. 3,000 it is less or more? More. So you have to stay in the limit. So you can deduct only 2,000. 3,000 will not be allowed. It will be restricted to 2,000. What if this figure of 3,000 would have been say 1,200 only? Then you can deduct 1,200. Up till 2,000 you can deduct. 2,000 in this question, huh? Because 20% comes to 2,000. So up till 2,000 means if this is 1,200, then you can minus as it is 1,200. But here it is in excess of the limit. So you have to cancel this and restrict to the amount of 2,000. So see how to present, in the first you will write like this, dividend from Unilever, inner column 10,000. Then you will write deduction under section 57. In that you will write interest on loan. Okay. And in bracket what you will write, 3,000 restricted to 20% of dividend income. In the bracket of interest on loan, what will you write? See, first you will write interest on loan. Okay. Can you see this thing? And below interest on loan you will write in the bracket, see like this you will write interest on loan, in bracket you will write 3000 comma restricted to 20% of dividend income, or you can write 10,000. Anything is fine. See, we are trying to show that it was 3000, but it is restricted. Restrict means to put it in the limit. It is restricted to 20% of 10,000. And then in the inner column you will minus 2000. So first you wrote 10,000 dividend, then minus 2000, 10 minus 2, outer column 8,000. Getting everyone correctly, outer column 8,000. Then first point we did dividend. Next is winnings from horse race. For winnings also, no, there is no expense for winnings of horse race. Okay. Anyways, even if expenses would have been given, we would have ignored. But for horse race winnings, there is no expense, it will be taxable. But yes, for lottery winnings, there are expenditure on lottery tickets. But winnings expenditure you have to ignore. Okay. And when you ignore something, it is better you write a note. What can you write? Expenditure in buying lottery tickets is not allowed as deduction. This you can write in the statement also or below the statement also. I repeat, what did I say? Expense on buying lottery tickets is not allowed as deduction. So lottery winnings 75,000, it will go entirely to the outer column, fully taxable. Then interest, circle interest. But in this question there is only one interest. But whatever it is it from GPS? No, not in GPS, so fully taxable. See, whenever you come across interest, you have to remember GPS only. Gold bonds, POSBA, PPF, Sukanya. So if it is not from that, so it will be taxable. So outer column 18,000, correct? Then dividend from cooperative society, taxable, outer column 1,000. That's it. So what is the total of the statement?
1,12,000.
1,12,000. This is taxable income from other sources. Then question number 9. See, this question I have tried to cover maximum points, because on exam day if you don't get much time, you can see this question. And question number 11 also was good. The one which we solved yesterday, last lecture, this gift, question on gift. See, right now only you can mark. In exam, if you have less time, you can simply do question 11, this question 9 which I am discussing now, and there is one more question 10. 3 questions you do, it's enough. See, right now for the sake of practice, I have given more questions so that by solving you get, try to memorize all the provision repeatedly. But on exam day, you can solve only 9, 10 and 11, that's it. 10 is yet to be done, this I have not even given in the homework also. 8 and 9 homework I had given yesterday by message in the group. So question number 9. See, in question 9, first point is interest. Whenever you come across interest, make it a rule to circle it. And as soon as you circle it, it will remind you of GPS. Is it there in GPS? No. So this is fully taxable. Directly outer column, correct? Then dividend from cooperative society, taxable. Then he has let out. Let out means to give on rent. What have we given on rent? Machinery, furniture. Is it building plus other assets or only other assets? So here you cannot write composite rent. Composite rent you have to write when? Building plus other assets. Because see, building has a separate head, income from house property. because it is structure of 4 wall and a roof. So if that is there, then we can say it's a composite rent, composite rent. But here it is not building. Here it is machinery, furniture. So even if there are thousands of assets, none of them is building, right? So it is rent of other assets. If you remember in our D.W. Ramu, the first rent of other assets. Anyways, by mistake, if you written composite also, they will not deduct marks for this. Mainly you have to show taxable or exempt. It's taxable. All rent incomes are taxable. So what is the amount? Monthly rent. Did you notice here it is monthly? Monthly means you will have to multiply by 12. So 2000 into 12 how much? 24,000. Okay. And then expenses are given. So you will write less deduction under section 57. In that first you will draw an arrow and write repairs 6,500. Okay. Then depreciation 18,000. Okay. So both the expense you have to show separately. Repairs, depreciation. Minus 6,500 minus 18,000. So what comes in the outer column? Yes, here you are getting a negative amount in the outer column. See, in this question, in the inner column, the rent was 24,000. And when you deduct expenditure of repairs and then 18,000 depreciation, you are getting a negative figure. And negative figure means what? You know, it is a loss. See, a person who is engaged in generating income, sometimes he makes loss. Like I am also busy in what? Generating income by teaching. But it's not necessary that I will generate income. I can suffer loss also. How? If I get less admissions, if I get less fees and my expenses are more, so I can suffer loss. And in income tax, what is the rule? You know, if there is income, you have to pay the tax. But if there is loss, you can adjust with your other income. If there is loss, you can adjust with the other income. Other income means we have got so many incomes. See, interest on Maharashtra government security dividend. So many incomes are there. It will get adjusted. You have to simply keep it as a negative amount in the outer column. And when you total up the outer column, automatically that negative amount will be deducted. This means the loss is set off. What was the language? The loss. See, this is the word. Loss is set off. See, the word set off is so common in income tax. After some time, you will also get used to. To set off means what? To adjust a loss against the income. So here it is happening this only. See here why I am saying loss. Obviously 24,000 was the rent. See if I get less income and I have to spend more. So if against my income the expenses are more, so I am making a loss. But the loss of 600 can be, use proper language, can be set off against other income. See, you should know how to write in the exam. The loss of 600 can be, sorry, it was 500. Sorry, by mistake I said, loss of 500 can be set off against other income. Okay. And this setting off is allowed. You know, later on we'll study a separate topic on set off of losses. There are rules for setting off the loss. See, right now I have not said any rule. I just said yes, whenever there is a loss, you can adjust with the income and you can offset. Okay. But there are some rules and regulations. For that, there is a separate topic. If you see the index, if you see the index of our book, look. See the index of our book. There is a separate topic on this. Set off and carry forward of losses. This we are going to do later, okay? But this is a famous topic in income tax, set off and carry forward loss. But right now you don't require that in-depth knowledge of that chapter. Just by common sense you can do that 500 loss is there. Let me adjust with other income. So that is a common sense and that is what law allows. Okay. Then next is rent from letting out a building at Andheri along with plant and machinery. See, now it is building plus plant and machinery. It is composite. And they have also written the word composite. So it's okay. Even if they would not have written, we know it is a composite rent. So 4,000 is per month. So multiply by 12. That comes to 48,000. Okay. And then for expenditure, what will you write? Less deduction under section 57. And what is the name of the expenditure? Expenditure. So just write expenditure. An amount 39,500 minus. Outer column you will get 8,500. Okay. Then he is an author of a textbook which fetched him. See, fetch means which made him earn. To fetch means to earn. Okay. Which fetched him a gross royalty of 45,000. See, by gross royalty, they are trying to say there are expenses also, don't forget. And that expenses they have given separately here below. Okay. So, royalty of 45,000 is gross and it is taxable. And for taxable income, there are expenses, you can deduct it. So, see what expenses are given. Salary to a clerk who collects from him necessary data and goes through the final proofreading. What do you mean by proofreading? To check whether there is some printing mistake or not. See, for example, I have made my book. I can give it to my student and say, just check and let me know if there is some printing mistake or not. So when you have to read totally, it is called proofreading. Means you have to literally read and check, is there any printing mistake? So that is done by usually authors, because see, authors' books are published across India. So they don't want in the book there should be printing mistake. See, in the class when we teach students, in our books you find some printing mistake, but it is a closed group. So we can rectify the mistake. But when an author is publishing the book across India, he has to take care that there should be no printing and spelling mistake in the book. So for that he has kept a clerk, and to him he has given salary. But whatever, it is an expenditure relating to writing books. So it is a connected expenditure. And whenever any connected expenditure you can minus. Okay. Anyways, you have done the same thing, only you have deducted. I am just explaining what is the final proofreading. Proofreading means check, just read the whole book and find out any printing mistake is there or not. Then purchased stationery worth 1,400 in connection of revision of the book. Even this is an expenditure related to royalty income. This also you will minus. Then telephone expense attributed. Attributed means related. Attributed means related. Connected. Related to publication and sale of his book. Okay. Means they are trying to say all are related expense. None of them is a nonsense expense. All are related. And it is good if we want related expense only. If there is some nonsense expense which has got no connection with my royalty, then you cannot minus. Anyway, they don't give any useless expense also. Most of the time they give all related and connected expense only. So 45 on inner column. Then you will write less deduction under section 57. And there you can write the name of the expenditure in short. See how I am writing in short. Salary to clerk. That's it. Stationery. Telephone expense. That's it. If you want, you can write in detail. See, our purpose just to name the expense. That's it. Salary to clerk, stationery, telephone expense. So minus 3 items. What comes in outer column? 40,400. Outer column 40,400. Okay. Then family pension. This is army family pension, normal one. Normal. So standard deduction. First you will write in the inner column 30,000. Less deduction under section 57. 1 upon 3 into 30,000, that is 10,000. Compare with 15,000, which is lower, so 10,000. Minus 10, outer column 20,000. Life insurance exempt under section 1010D, outer column dash. Agriculture income in Gujarat. Gujarat is in India. Exempt under section 10.1. Outer column dash in bracket. Exempt under 10.1. Then agriculture income from Malaysia. Taxable. Malaysia is foreign country, so taxable. Then circle interest. For all the interest income, there is a standard rule. You have to search in GPS. You have to search in GPS. If it is in GPS, it will be exempt. So first one is POSBA. It is in GPS, so exempt. But how much? 3,500. 3,500 you will minus, so outer column. Okay, you will write exempt under section 1015. 3,500. Outer column you will get 5,000. Canara Bank savings account. It is not in GPS, so taxable. PPF is there in GPS, exam underseen 1011 dash. And this is not in GPS, so taxable. Outer column 1800. So that's it. We have discussed all the homework questions. Okay. Yes. Okay, total, yeah. What is the total of this? 161, 300. See, in this totaling, did you deduct the loss? There was a loss of 500 in one rent income. So that you have to minus in the totaling. Okay. Means all amounts you added, but that 500 was deducted. So answer comes to 161, 300, correct? Taxable income from other sources. Then, now see, now few points are remaining in this chapter. Wait. Look here. Ready? See. See, last lecture I had explained that if you get movable property as gift, then we have to see the fair market value of that. If the fair market value of the gifted item is up to 50,000 exam, above 50,000 taxable. But what do you mean by movable property? So there are only certain items which are treated as movable property. Means law has given definition of movable property. See, what is that? There is a keyword, jasvi. Okay. In that J stands for jewelry. See, only if you receive these items, then only taxable. Jasvi is a list of items which I will say right now. But whatever it is, only items covered in jasvi will be taxable as gift. That means if you get gift of some other item other than jasvi, no tax. Reason I will tell you, but first let me complete the full form of jasvi. Okay. So in jasvi, J stands for jewelry. Now see, when I say jewelry, it means gold, silver. Sometimes they write bullion. Have you heard about the word bullion? Bullion means it is raw gold. See, whenever gold and silver is in raw form, it is in the form of a brick, it is in the form of a biscuit. So it is called bullion. So bullion is nothing but gold and silver, but in raw form. But that same gold and silver, if you do some processing, if you make ornaments, they may call it as jewelry. Okay. So jewelry includes gold, silver, bullion, diamonds, everything. Okay. So what was the full form? In Jasvi, J stands for jewelry, A stands for artistic work and archaeological collections. Artistic work means any artistic work like drawings, paintings, sculptures, or any artistic work, art. And actually there are two A's, artistic work and archaeological collections. Have you heard about this archaeological collection? See the spelling. Archaeological collection means antiques. Antiques. What do you mean by antique pieces? Antique means these are items of ancient time, very old days. These things are usually found under the ground. There are some people who are into archaeology. What they do, they keep searching the ground, and sometimes they dig the ground. Under the ground they find some very old thing which was available say 200 years ago, 1000 years ago. So if any item which is 1000, 200, 500 years old, we call it as antique piece. And these are usually found under the ground or under the water also. Okay. Because these are such an old thing. It is not available on the land. They are all buried in the land. So they are called archaeological collections. Okay. And these things, have got lot of value. In exhibition, many times you see there are some antique pieces. People pay crores for that because that item is not available in today's market. These are such old and ancient items that in exhibition, if you put, people are ready to pay crores. We will not pay. But there are some people who are fan of such antique pieces. Okay, they are called archaeological collections. So what comes in movable property? Read Jasvi. In that J stands for jewelry, A for artistic work and other A is archaeological collection. Then shares and securities. Shares and securities. V stands for virtual digital asset. Yes, virtual digital asset means nowadays, have you heard about bitcoins, cryptocurrency? See, bitcoins and cryptocurrency, they are not physical assets like this. They are generated through codes in the computer. Means in the computer, there is some activity called mining. There is some activity in IT language, we call it as mining. And by doing some mining and doing some calculation, they generate a code. And that is a computerized code. But even that is a value, people sell it and buy it. We call it as cryptocurrency. Okay. Crypto means it is encrypted. Encrypted means no one can break the code. For example, see my mobile you are not able to open. Why? Because there is a password. So it is one way encrypted. So with the word encrypted, the word comes crypto. So cryptocurrency means it is a currency, but it is not freely anyone can take it. It is coded. Anyway, it is a hi-fi concept, but in short, this cryptocurrencies and bitcoins, they are called virtual digital asset. Even that is a market nowadays. You know, nowadays all small young people also, they have got app in the mobile. They keep purchasing and selling cryptocurrencies on mobile app and they make money in that. So what are the items covered in Jasvi? Jewelry, artistic work. There are two A's. One is artistic work, other is archaeological collections. Then S for shares and securities. Virtual digital asset. Only if these items you get as gift, then only tax will arise. That means if you get something other than Jasvi, like for example, someone gave me washing machine as a gift. Someone gave me microwave oven as a gift. Someone gave me mobile phone as a gift. I don't have to pay the tax. Because these are usually gift items. See, basically, if law feels it is a genuine gift, government doesn't want to tax it. See, Jasvi is not gift items. These are investment items. Investment items people preserve as their property. If this is given as gift, it's not believable. Yes, some people give microwave oven, fridge, washing machine as gift. That can become a gift item also. Because these are not investment items. Fridge, washing machine, do you purchase? But you know, movable property, why government is not taxing easily? Because movable items are the things which normally you give as gift. Tell me, if I have to give gift to someone, money will be the last thing I will think of. Genuinely, I want to gift someone. For example, my friend is getting married or it is his birthday. I changed my example because marriage gift is anyways exempt. Marriage was a wrong example. Let's assume my friend has a birthday. And if I genuinely want to give the gift, money will be the last option. First, I will try to find what will my friend like. Then I will think, yes, my friend doesn't have a washing machine at his home. Let me gift a washing machine. Okay. So these items are giftable items. If you gift these items, tax doesn't come. But if someone gives gold, then that comes in anyone's eye. Oh, gold. You gave Reliance shares as gift. These are not gifting item. Okay. Then government says, okay, very good, you gave nice gift. And the one who has received gift, he has to pay the tax now. So in short, and even immovable property is not a gifting item. Tell me, if your friend's birthday is there, will you think of giving him one house as gift? See, Jasvi and immovable property, these are investment items. See, there is a difference between investment things and gifting things. If it is a gifting thing, gift it, no tax. But these are investment things. See, immovable properties are always investment items. In immovable property, what comes? Houses and land. Houses and land, they are always investment items. So this will always come in tax. But movable property is a big world. There are so many things. Even this is movable. Even this is movable. Even my iPad is movable. So many things are movable. But in movable things, only Jasvi items are actually investment items. Okay. And you will also agree, in movable things, when you think of investing, what do you think of investing on? Jewelry. Shares, these are the investing items. And nowadays some people invest in cryptocurrencies. So only investing items given as gift, it will be taxable. And all other items other than Jasvi, law says they are not investing items, they are just gifting items. If that is given as gift, government will not tax. And if someone feels bad, why government is not taxing? See, firstly, government doesn't have a right to tax on gift also. That I explained last lecture. So whatever government is getting, government is happy with it. Technically speaking, government should not tax gift. Why? It is not an income. Income tax is a tax on income and gift is not an income. Why? Because this is something you got free. Income means what? Something for free or give and take? Give and take. When you give something and in return you get something, then you can say I have earned it. Then only it should be taxed. So gift is actually not a thing to be taxed. But then I told you last lecture, people used to do cheating. So government started tax. But then government is not that greedy that everything they are taxing. In movable property, they have restricted to only Jasvi. Okay. So see, money is always taxable. Movable, only Jasvi items taxable. Immovable property, everything is taxable. Okay. Yes, you had some doubt? Yeah. Yes. See, car is not an investment item. See, his doubt is what that right now what statement I said, all the items which are investing items, investment items, if that is received as gift, it will be taxed. So in the list of investment items, I said Jasvi. So someone had a doubt, sir, what about car? See, car is not an investment item. Car is utility. Car depreciates. Its value doesn't grow. See, investing item means what? When you think of investing, what is your purpose? That let me invest 1 crore, it will become 2 crores soon. My money will double. They are investing item. See, you buy car, although cars are also costly, you get a car for 1 crore also. But that is your lifestyle. It is just for utility, status symbol. But it is not an investment item. Investment items are such where you have the expectation that the value will grow. But cars value will never grow. Okay. Anything you imagine other than Jasvi, you will not find any growth in that. Even if you buy a mobile is investing item. See, casually you might say iPhone is a big thing, it is an investment for me. See, casually saying investment is different. Actually, so see this full form I have written here. Look, Jasvi, J stands for jewelry. See, in jewelry also what things are included? Gold, silver, even bullion. Many times in the exam they have written bullion. And students think this is not covered in our list, sir. What it is not covered? Jewelry is a broad term. It includes gold, silver, ornaments, diamonds, bullion. See, bullion is nothing but gold and silver only, but in a raw form, in the form of brick, etc. Then artistic work. Artistic work will also include drawings, paintings, sculptures. Then archaeological collections, shares and securities, virtual digital assets. Okay. Then see one more thing. Look. See, if movable property or immovable property is held as stock in trade, then it is not taxed. Even if you get at no price or low price. Generally, just we immovable property, if you get for no price, low price, the tax arises. But if it is held as stock in trade, then it is not taxable. What do you mean by stock in trade?
The SSE is trading in those.
Stock in trade means it is an item in which I am dealing. It is my business to sell that item. For example, see, jewelry, if you receive as a gift, normally it is taxable. If the market value of that is above 50,000, it will be taxable. But imagine I have a jewelry shop only. It is my business to buy and sell jewelry. Then for me, jewelry becomes stock in trade. Trade means to buy and sell. Stock means goods. So for a business of jewelry, a person having a jewelry shop, jewelry is like stock in trade. So answer this if you understood. Imagine I have a jewelry shop, okay, and I get some jewelry free of cost. Value is above 50,000 also. So what is the rule for that? It will not be taxable. Why? See, see, because it is stock in trade, don't say that was the rule. That is the rule, but why?
He will sell it and pay income tax.
See, in the whole gift concept, one thing is common, whenever law feels it's a genuine case, government will not tax it. Like tell me, I am Dr. LC. Why it is exempt? Because they are genuine gifts. So whenever the transaction is very genuine, government will not tax, right? So see, jewelry shopkeeper getting jewelry free of cost, it is normal because they get free samples. Imagine I have a shop of jewelry. So many times some necklace, etc. I get as a free sample. See, if you get some necklace free of cost, people will be surprised. Wow, what a gift. But for a jewelry shopkeeper, if he gets some necklace or some gold item or some earring or nose ring free, so that means he should be getting it as a free samples. See, in a business there is a trend. Your suppliers give you free samples so that you like that product and you start selling it and you place order with the supplier. So getting free of cost or even at low price, it is very normal for a businessman. Tell me, since I have a jewelry shop, don't you think I might sell the jewelry for 1 lakh? But the same thing I might be getting at 10,000 also. Because it is a business. Because since I have a jewelry shop, I have got good connection with my supplier. They provide me gold, silver at a lower price. But here if government says, oh, you got at low price, the difference is your benefit. See, this rule is for a normal person, not for a businessman. Okay. So see, best way to think is, if something is like a stock for me, then getting it free or at a lower price is very normal. And if something is normal and very genuine, government will not tax it. Firstly, government feels guilty to tax gift. Why? Because actually it is not an income, but there are cheaters in India. They used to claim incomes also as gift. For that, then they started the tax on gift. But then somewhere government knows at the back of the mind that we feel guilty to tax. So obviously they will have to free those transactions which are genuine. So this is a genuine transaction. And you will agree with this. See, for example, tell me, it is my business to buy and sell land. So for me getting a land at a low price is very normal. See, businessman acquires everything at a lower price only. Then he sells it to the customer at a higher price to make profit. So in short, but see, it should be stock in trade for whom? Not for the one who gives, for the receiver. See, the one who received it, for example, received jewelry. So jewelry should be stock for me. If I received land, land should be stock for me. If I received a house, house should be stock for me. And house is stock for a construction company. Or the one who is dealing in buying and selling flat. So the one who has received, for him it should be a stock item. It should be goods item. Okay. Yes, you had some doubt. See, income from business will arise when this gifted item is sold further. See, whether you sell it or don't sell it, it is not relevant. When you are getting for free of cost, at that moment only tax can come. It will not come, it's a different thing. But the moment I got it for free, government could have taxed me. But thanks, government has understood that it should not be taxed. Yes, you can also say it like this, sir. Eventually that item you are going to sell, and when you sell you will make profit, it will become your income from business. See, that is a different thing. Irrespective of that, if government would not have made this rule, it would have been taxable. Law could have been very rude also by saying what? You sell it, you don't sell, you throw it. That's your problem. You got for free. You are a jewelry businessman, you got jewelry free, pay tax. The law would have been senseless like this also.
Yes.
But they are sensible, they understood that for a jewelry businessman, if he gets jewelry free, it is like a free sample he is getting. And if he gets at a lower price, suppliers might be giving him at lower price because it is a business to sell jewelry. See, jewelry was just an example. See, whether it is jasvi or immovable property, if these items are stock in trade, then it will be exempt, no tax. Okay? So, see, I have written this thing here. If the received property is stock in trade, see, received property, whether it is jasvi or immovable, if that received property is stock in trade for the receiver, then no tax. Okay? Okay, answer. I am a teacher, I am not a jewelry businessman. Imagine I am a teacher, I got gold from a jeweler. I got gold from the jeweler. So, for a jeweler, gold is stock, but you have to think from giver's point of view, receiver. Receiver is me, I am a teacher. I am not jewelry businessman. So, if I get gold as gift, I will have to pay tax. If I say, no, the one who gave me the gold is a jeweler, for him it's a stock, or for him it's a stock. You are happy, you are a teacher, you got gold, pay tax. That's why you don't have to see the giver, you have to see the receiver. The one who received, for him it should be stock in trade, then only it will be exempt. Okay. So see, based on this, there is one question. See this one. Question number 10. You know why this question was not given as homework? Because this question has this point of stock in trade. We'll be able to finish this sum right now. Prepare one statement of income from other sources. We are solving question number 10. Ready? Okay, read. Mansoor, a dealer in shares. What do you mean by dealer in shares? Property only jasvi items taxable, other items not taxable. See, understand the chart properly. I repeat. See, let me repeat whole thing. Gift from employer, salary. Gift from customer, business. Other gifts, first you have to check in, I am Dr. LC. Any gift you have to first check out in, I am Dr. LC. See, I am Dr. LC, if it fits, then jasvi and all that knowledge is not relevant. Anything in I am Dr. LC exempt. But if it doesn't fit in I am Dr. LC, then it becomes others. Then you have to see, is it money? Then aggregate all money together. And if it is not money, then you have to see, is it movable property? In movable property, if it is jasvi, then it will be taxed. Not jasvi, ignore it. Means not taxable. Okay. And immovable property, there is nothing like jasvi. Okay. But this money, jasvi, etc. It is all in other gifts. But the point which we did right now, it falls in I am Dr. LC. And once I am Dr. LC, don't use the knowledge of jasvi, etc. No price, low price. Everything becomes irrelevant. See, the things of no price, low price, jasvi, all this comes in others. Okay, other than I am Dr. LC. But our question, this point falls in relatives. And relatives means I am Dr. LC. So you don't have to think anything then. Exempt. If you are not in I am Dr. LC, what you have to think, Whether it is money, movable, immovable. If movable, it should be just fee only. And then you check the amount also, above 50, below 50. Everything you have to check. But all that headache starts when? When you are not in I am Dr. LC. Once you are in I am Dr. LC, there is no botheration. It is straight exempt. So see, if you can write here, brother-in-law means you can write a relatives. In the question only you can write relative. And in bracket you can write I am Dr. LC. In LC there are two C's. One is charitable, other is COVID. COVID treatment, COVID death. Okay. So this is I am Dr. LC gift, so it will be exempt. So you will put amount or dash? Dash. So what will you write? Gift of bullion from brother-in-law. This way you can write, correct? Gift of bullion from brother-in-law. Okay, you can also write gift of bullion from brother-in-law in bracket relative. Gift of bullion from brother-in-law in bracket relative. Dash. If you want, you can write. If you want to write this section, what section you can write? 56 to 10. Done? Then next point. On 23rd June 23. This falls in our previous year. Heard my language of saying? This falls in our previous year. Our previous year means what is our previous year? 23-24. So it falls in 23-24 only. Okay. And obviously they will give all the transactions of 23-24 only. Okay. So what is written? Mansoor purchased 5,000 shares of Orange Limited at 500 per share. Market value 800. So the shares has a market value 800, but I have paid only 500. So it is purchase of shares at low price. But because he is the dealer of shares, if he gets shares whether free or at low price, it will be tax free because it is a stock in trade for him. And as I told you, if you are into the business of a particular item, so that item you can always get free, like a free sample, or sometimes your supplier might provide at a lower price. So for a businessman, getting something either free or at low price is very normal. So that's why this will be exempt. This is the point I told before the sum. So see how will you write here? Wait. Give purchase of shares at low price. Exempt because what should I write?
Stock in
Shares are
stock in trade.
stock in trade, or you can write shares are stock in trade. That's it. Yes, you can write that. Because shares are stock in trade. For Mansoor also you can write this way, for Mansoor. Yes, for assessee, or you can write the name also, that's okay. This was the main point for which the question was done. But see, here I was solving along with you, that's why you didn't find it tricky. But many students, look here, look, they don't read only this line properly. By reading this line, I came to know, oh, shares are stock in trade for him. So I read along with you, I pointed out, that's why you realized. If you would have randomly tried this question, you would not have realized that, oh, this is a case of stock in trade. So you have to read the question carefully, okay? So you can also highlight this thing. Dealer of shares. So there only you can write means. What you can write means shares are stock in trade. Right there for your understanding. Means shares are stock in trade. Stock is like a goods for him. Okay, then see one last point of this chapter. See, there is one different type of gift right now I'll discuss. This is something gift at the time of issue of shares. Now tell me, don't look at this right now. Tell me when a company issues shares. So what are the types of issue you have studied? Issue at par, issue at premium, issue at discount. Nowadays issue at discount is not allowed, okay? So but you heard about that, issue at par, issue at discount, issue at premium. At par means shares are issued at face value. Premium is above the face value. Discount means below the face value, okay? Okay, now see, if I want to issue shares, when can I issue shares at premium? Only when my company is worthy, when my company has a good valuation, then I can issue my shares at premium. Imagine I am a very reputed, very famous company. My company has got great value in the market. So such a reputed company will obviously issue the shares at par or premium. Premium means what? You are charging extra amount. And you deserve to charge extra if you are a valuable, reputed company. Okay. But see, sometimes some companies issue the shares at premium, but they don't deserve that much premium. For example, I have a company and my company's share value comes to 15 rupees only. Face value is 10. But as per the balance sheet of my company, the valuation of the shares comes to 15. What do you mean by valuation as per balance sheet? You know how to value shares of a company? Shares of a company are valued by following what approach? All the assets are taken at market value minus all outside liabilities and divide by number of shares. You get the per share true value of the shares, which we call it as intrinsic value, market value, something like that. This you will study more in accounts, okay? So imagine I am running a company, and if you look at my balance sheet, on the asset side, there are asset, liabilities side, there are liabilities, and all assets I took at market value. Whatever value of the asset is in the market value of all asset minus outside liabilities, divide by number of shares. And let's assume my share value comes to 15 per share. Face value is 10. But as per the balance sheets type of the asset which I am having, its market value, it comes to 15 per share. That means if I want to issue the shares, my issue of shares should be at the most at 15 rupees. Face value is 10, but my shares market value, the worth is 15. So I deserve to issue my shares at 15. But now if I issue the shares at 16, then I am charging something more than I deserve. Charging means charging the issue price. My valuation is only 15 per share, and I am issuing these shares for 16. So I am getting 16, which is more than what I deserve. So what is the extra amount I am getting? 1 rupee. That 1 rupee becomes my gift. So whenever a company issues shares at a premium, what law says it should not be more than what you deserve. But they control the public companies. But there are many private companies, they are not controlled by SEBI. And private company, as per its own wish, what it can do, it can issue the shares at any price. But the moment government realized that you are issuing a shares more than your worth, then the extra amount will be taxable. Taxable not for the shareholder. See, shareholder has to pay in the issue of shares. 1 rupees per share, and I had issued say 1 lakh share. So 1 rupee into 1 lakh, that comes to 1 lakh rupees. And if I issue 10,000, so 1 rupee into 10,000 shares for 10,000. But whether below 50 or above 50 doesn't matter here. Because this is a different kind of gift. And this is also governed by a different section. You know the section for this is what? 5627B. This is a different section. See, here I have written. Oh, I was wondering, how did you know the section? It was written here. 5627B. Okay. And that previous series of gift was normal gift, 56 to 10. See, this is a typical rule for private companies. Private companies are also known as closely held company. Closely held. For example, my coaching class Prime Vision, I am shareholder, my wife is shareholder, so it is closely held by 2 people. So when only 2-3 person becomes the owner of the company, it becomes closely held, or you can casually say it as private company. And the rule is for these companies only, huh? Because for public companies whose share prices come in stock market, if they go for a public issue, their issue prices are regulated by SEBI. They cannot charge anything to the shareholder in public issue. Okay. But a private company, when it makes the issue, although the shares worth is only 15, but they are issuing it at 16. So that extra 1 rupee becomes taxable. Okay, do one thing. But see, this theory is applicable only when the issue is at premium. Okay. Okay, now answer if you understood. My shares value as per the balance sheet comes to 7 rupees only. Because in my balance sheet, the assets are useless. And there are so many liabilities. So when I saw the balance sheet of Prime Vision, all asset minus liability, the net assets divided by number of share, it came to rupees 7 only. 7 rupees per share. Okay. And face value, let it be 10 only. Huh? I issued the shares at 9 rupees. Is it issued at premium? No. Although my market value is only 7, every company has got right to charge the face value. In corporate language, every company has got right to charge at least the face value. So in this example, you heard that Sir's company's valuation is only 7 per share. Then he should not charge anything above 7. But see, up till face value, everyone has got right to charge as the issue price. Face value is my birthright. This every company says, okay. So even if the shares value is 7, I am issuing at 10, but 10 is the face value only. So the rule doesn't apply for issue at par. The rule is only for, yes. If you go for premium, premium means what you are charging extra. Then you do, you deserve that much that you are charging extra? Then we see, tell us what is your worth, what is your value per share. It's 15. How come you charge 16? Then the extra amount is taxable. In short, I wanted to highlight what this rule is only for issue at premium. And the example which I gave, I issued at 9. It was a issue at discount. Okay, now answer. As per my balance sheet, my value per share comes to only 3 rupees. Because my company's balance sheet is very weak. It comes to 3 rupees per share. And I am issuing the shares at 10 rupees. No problem, because 10 is the face value. See, in all my example, 10 is the face value. So till face value, everyone has got birthright to issue. When a company goes for premium, then you should hold the years. Premium, do you deserve that much premium? Okay, now answer this. My shares value as per the balance sheet comes to 7 per share. And I am issuing the shares at 13 per share. Then see, you went for premium, then full difference. 7 and 13 full. If you go for premium issue, then you are gone. And once gone means the difference between issue price and market value per share. Means that value per share. Means that 13 minus 7. Full difference will be taxed. Okay. No, but see, you should have issued at face value only. See, in this example, instead of 13, if I would have issued at 10, then government says, okay, till face value you can issue. But the moment you go above 10, even if it is 1, then 11 rupees issue price and your market value is only 7. The whole difference will be taxable. But if you would have kept the issue price at face value only, then no problem. Then let there be a difference between the value of your share is only 7 and the face value is 10. Let it be. You issued at par. But if you try to do a daring of issuing the shares at premium, then government will not leave you. Whole difference will come. See, all varieties are covered in this. Look, let us try one by one. Look here. Try this. See, there are 1, 2, 3, 4, 5 cases. All varieties are covered. Okay. Best is what First you have to check where you find issue is at premium. Only when the issue is at premium, this section will apply. Issue at par, issue at discount, this section doesn't apply. Because issue at par, issue at discount, government has got no objection at all. So see, check this. This is issue at par. Issue at par means what, you understand or not? Face value, issue price same. Face value 10, issue price 10, issue at par, ignore this thing. Don't even see the FMB, you will get confused. See, you have to see the worth of the company if it tries to go premium. Because going for premium means what, you are charging extra. Then we have a question, do you deserve that much? Okay. So see, this was a typical case of issue at par. So, section not applicable. Then second case, face value issued at 8, issue at discount. I repeat, nowadays issue at discount doesn't take place. Okay. But anyways, private company, anything is possible, okay. But whatever, it is not issued at premium, so this section is not applicable. Okay, so I'll do one thing. I will just cancel this only. Here section, what was section 56 to 7b, not applicable. Okay. But now if you see, this is issue at premium, issue at premium, issue at premium. See, issue at premium is decided how? By comparing the face value and the issue price. See here, in all three cases, the issue price is above the face value. And when you charge above face value, that is the case of premium, right? So now tell me what to do. Here I am charging a premium of 2. So you have to ask, do you deserve that much? What is your worth? So you have to see the fair market value. So what is the market value? 13. That means my worth of share is 13 per share. Till 13 also if I charge, I deserve it. Because my balance sheet has got valuable assets. All assets minus liability divided by number of equity share, it comes to 13. So up till 13, if I charge the issue price, it's my right. But I am charging only 12. So it is well in my rights. So no tax. Okay, so now try next one. Next case, my valuation is 11 per share. Yes, my valuation is above face value, so I deserve to charge 1 rupee premium. But how much I am issuing at? 15. So here I am charging issue price more than my worth. My worth is 11, but I am charging 15. So what is the extra amount I am charging? 4. So 4 rupees per share taxable. And this 4 rupees is per share. Huh? Now you have to see how many shares company issued. So that you can multiply and make it taxable. But here it will be taxable. Okay, see till now we are done here. See here what I written? Issue at par, not applicable. Issue at discount, not applicable. Your issue was at premium, but below FMV, rupees 5. Okay, my worth is 7 and I am daring to charge 12. But I repeat, this is only for closely held company or a private company. Okay. So this was the last point. This point is not there in our question right now. Okay. But see, in one topic of deemed dividend, there is one topic deemed dividend. There I have taken this point. Wait. Just to show that point, I will show right now. See this page number 83. See, I am not solving the full question right now. Solving the full question not possible because it requires the knowledge of deemed dividend. And deemed dividend, I said this I will not take at this stage. I will take it at a later stage. Okay. Right now, anyways, I am winding up this chapter and moving to the next topic. But deemed dividend is technically part of income from other source, but it is not a right time to teach the students at this stage. Okay. Once you become very comfortable with taxation, then this will sound very simple. Okay. It is not that it is tough, but it is little awkward. So only when you get used to the rhythm of taxation, when you feel the tax is a normal subject for us, then we can touch this topic. Okay. But right now, why did I take this question? I want you to try this point only. Just try this much. Did you read? MNS Private Limited, closely held company, issued 12,000 shares at 125 per share. Face value 80 and the market value is 110. See, market value here means what, you know? See, for private company, you don't come to know stock market prices. Stock market prices are there for public companies. And this is a private company. So, market value doesn't mean the market price of stock exchange. It is as per the balance sheet of the company. See, private companies valuation, how do you do? With the help of the balance sheet. By net assets method. All assets minus liability at market value divided by number of shares. This way they have given this 110. So tell me what are the three figures with you? Face value 80. Issue price 125. Fair market value 110. See, first what you should check, is it issued at par, discount or premium? Because if it is issued at par, ignore this section. This section is not applicable. Issue at discount also, this section is not applicable. First you have to check that only. Okay. So is it issue at par or discount? No. This is issue at premium. Now issue at premium means you have to ask, do you deserve that much premium? How much you deserve, that depends upon your market value. My market value permits that I can charge only 110. But what is the issue price I am charging? 125. So I deserve only 110. But I am charging 125. So what is the extra amount? 15 per share. Multiply by how many shares? 12,000. So this will be taxable. This will go directly in the outer column. Okay. But see, this full question, it is not possible for us to solve. You know why? Because see, this point will come in the topic capital gains. Actually, this is a question of income from other source only. Okay. But this point will be taught in capital gains. This point, which are circled, it will be taught in capital gains. But the point pertains to income from other source. And this point, this first paragraph has a point which I will teach very late in the topic of deemed dividend. In short, although the question is of income from other sources, but there are certain points which are not taught right now. Okay. Yes, you can try this point if you want. These points we have studied. Try. See, this is not possible because not taught to you. By the way, let me tell you, this is exam question. Huh? Exam question. Try third point. Nitin transferred a house property to his son Raj without consideration. See, whenever you come across gift, you know what should be your line of thinking? First check, I am Dr. LC. If you are not in I am Dr. LC, then you use your extra brains. Money, movable property, immovable property should be just be blah blah blah. Okay. But first you have to check out I am Dr. LC. So this is a case from I am Dr. LC.
Yes.
Son. Means he has given property to his son. And for a person, his son means lineal descendant. Do you remember this lineal descendant I said?
Yes, sir.
So son, where is he in the family tree? Yeah. See, this is called lineal descendant. How do you spell it? Like the descendant. Okay. Means my children, grandchildren, great grandchildren also on. So in the question it is son. So this is falling in the relatives definition. So exam. So this is exam. Try this also. See, full question it is not possible to solve. But whatever you have learned up till now, let us try that much. Try this. Tanmay gifted a refrigerator to his sister's daughter Tannu on her marriage. See, firstly, marriage gift is I am Dr. LC. Even if it was not marriage, even if doesn't fall in I am Dr. LC. See, if something doesn't fall in I am Dr. LC, what you do? Tell me.
We just spell.
If something doesn't fall in I am Dr. LC, you become others. And then you check money, movable property. So your refrigerator, movable, but it is not falling in just we. Anyways, tax will not come. You didn't see it was refrigerator. Wait, let me show.
Yes.
But see, firstly, looking at marriage only, you should say that's it, exam. Now, whether it is a refrigerator or a bungalow, marriage gift is always exam. Okay. But I'm just saying, for example, if it would not have been marriage, then wait, is it relative? Sister's daughter? My sister is my relative, not my sister's daughter. Sister is relative. Sister daughter is not relative. So imagine this was not marriage and this is not relative also. Then it is not I am Dr. LC and not I am Dr. LC, then others. Then you will see it is refrigerator. So it is some movable item. But sir has taught us that it should be only just we. But fridge is not just we. So not taxable. So that way also not taxable. But anyways, looking at marriage also it is not taxable. Okay. So we are done with income from other sources as of now. Few points of income from other sources are left. But that will come at a later stage. I repeat again, don't match all this with study material. Study material, you will find everything given randomly. See, they don't have to teach you. They have to provide a material to study. So they will provide whatever is given in the law as it is. But I have to teach you and I have to hold your hand in such a way that you should not fall down. I have to carefully and thoughtfully take you in such a way that you understand everything. Okay. If I try to expose of my knowledge, then you will get confused. So my job is not to do exhibition of my knowledge. I have to teach you. So I have to teach everything at the right time. Okay. So as of now, our topic of income from other sources is over. Okay. So we can start with a new topic. At least we can start today. Okay. The next chapter is, wait, for next chapter I'll start a fresh recording. Wait. Okay, see, our next topic is, look, income from salaries. Now see, when you call some income is a salary, you know, when there is a relationship of master and a servant, means there should be relationship of master and servant. Master means your boss. We call it as employer. And the one who is doing the job is a servant. We call him as employee. And once this relationship develops, that someone is your boss and you have to work as per his instructions, orders and directions, you become a servant. And in such relation, it comes income from salary. See, no one likes to be servant of someone. But then for our survival, for our livelihood, we want some income. So for the sake of income, we become ready to, we become ready to become a servant of someone. Okay. Otherwise, who likes to be servant of someone? Everyone wants to live the life the way they want. But just for the sake of income, sometimes you are ready to become a servant, and such income is called income from salary. Okay. Now, this is the summary of the chapter. You know, in income from other source, what was my strategy? I gave you a keyword. D.W. Ramu Fakirji. One by one in each point, what I was explaining, taxable exam, taxable exam, taxable exam. Same strategy in this chapter. See, this is a list of items which you have to study. You know what are these items? These are the things which you get when you work in some company and when you do job. Whenever you are doing some job, these are the incomes which you receive. Now, for each item of income, I will teach you whether it's taxable or exempt. See, this chapter, although it is a new topic, but you will find it is same. Only the variety of income will be different. In the previous topic, you used to find dividend income, agriculture income, but now you will find only those items which arise in a job. So tell me, in a job, what type of income comes? Salary, allowances, provident fund, gratuity, pension, leave salary. See, these items, some you heard of, some you not heard. But don't worry, I will explain the meaning of each and every item. But at least you get a fair idea that yes, these are the items which you get as income when you are doing job somewhere. But whatever, these are items of income, and whenever we come across some income items, our learning objective is taxable or exempt, taxable or exempt. And the strategy is same in this chapter also. In the question, they will give some income, but obviously not now DW Ramu Fakir incomes. They will give incomes arising in a job. And in the answer, you will prepare a statement. And one by one, you will check, is it taxable? Write the amount. Exempt dash, taxable amount, exempt dash. Same strategy you will follow. And here also, if something is exempt, section 10 will come. In short, what I am trying to say, don't feel this as a new topic. It is just new items of income will come. But the strategy of learning and solving the sum remains the same. And which is what? Taxable or exempt. Okay. So can you tell me, once I start with this point, here what I will explain, that what is basic salary, whether it is taxable or exempt, that I will explain. Okay. Then when I teach you leave salary, what will I explain? What is leave salary? Then whether it is taxable or exempt. So for each item, my method will be first make you understand the meaning and then taxable or exempt. And once I finish all these points, look. Once I finish all these points, the chapter is over. But this is not a small topic, it is a big topic. See, in D.W. Ramu Fakir ji, there were many items. Here also, number of items are that many only. But for each item, there will be a detailed discussion. Only thing is, this chapter will become little lengthy. But the method of understanding will be same as income from other source. Do you know the reason why I start my subject with income from other source? Because in income from other source, you get the rhythm. That yes, in income tax, there are different incomes for which we have to learn taxable, exempt, taxable, exempt. And in income from other source, it is so simple that if something is taxable, exempt, then fully exempt. But in this chapter, you know why it will become little tough? If something is exempt, there will be some formula, some amounts to be remembered. See, in the last topic, hardly you have to remember some amount. Minor child 1,500, POSBA 3,500, and in gift that 50,000, and 10 lakhs was there. COVID death. But other than that, there were no amounts to be remembered. But in this chapter,